warm welcome to this very special interview on the Money Mile. Joining me today is one of India's most dynamic mutual fund leaders, Swarup Mohanty, who's the CEO at Mirae Asset Investment Managers, one of India's fastest growing mutual fund houses. Thanks very much, Swarup, for joining me here today. It's always a pleasure talking to you. Swarup, one of the areas that has seen a fair amount of progress when it comes to the Indian mutual fund industry is the rise of ETFs. While globally these are very popular products, in India they've been a bit of a late starter. They are low cost and they allow you to buy broader indices at a fairly low cost. What is the future of ETFs as far as India is concerned?
See, I think that the ETF question has been there in the subconscious level of everybody. Data till last year has been suggesting that beating the benchmark has been becoming difficult with times. And that's something which will play out in the next 4 or 5 years. Earlier, we would have a debate whether it's active or passive. I do believe from here on, it is a combination of active plus passive for two reasons. One, I think you rightly pointed out that the cost of those funds are fairly attractive. And then when you combine the two, your overall cost of your portfolio comes down. And that can be one benefit, but that is not the major benefit. The way I see it, if you can combine both sides, there are enough complementary products to substantiate or enhance your portfolio. I'll give you a small example, which I learned myself. I didn't know this just a year ago. Suppose you are buying a large cap fund, and I do believe that, because of the inefficiencies right now in the market, which have come about due to COVID, the fund managers have been able to buy some stocks at some great prices. And I believe in the next 2-3 years, the large caps are back and they have a great chance of beating the benchmark. Suppose you buy the large cap, which is necessarily benchmarked to the Nifty 50, right? But if you combine that with the next 50 sort of ETF, you are able to get the entire top 100 stock portfolio, which otherwise you are not getting by buying a large cap fund. So if you make those combinations, you can form a far superior portfolio, and that should be the better criteria than just the cost. Yes, cost is important, I do agree. But going forward, I do see, and that's what is a reflection of us being globally watching the ETF space, the ETF space will throw up great creativity. I have seen that there is a lot of active thinking in this passive side of the business. Globally, we are known for some of our very, what can I say, creative products. We are known for a marijuana fund globally. Our AI-based fund is also known now worldwide. So this will only grow, and some of the strategies that will come up on the ETF side will complement very well to form a far stronger portfolio. So the key is combining both. Going forward, as I said, for an investor, it is no longer whether it's active or passive. It is active and passive, and together one can form a very, very comprehensive portfolio which will encompass the entire market.
Thanks very much, Swarup, for joining me for this interview, and hopefully things will get better soon. Thank you once again for joining me.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.